Hello traders, Gary Wagner here, approximately 10:30 in Honolulu, 4:30 in New York on Monday, 25th day of November 2013, and this is the daily report for gold and silver. Although slightly off the highs of the day, we've had a tremendous range in gold with it hitting a low in trading last night, a low of 1225.80. You can see that it's roughly at 1250 now. We've got a $25 swing in a 60-minute chart. You can see it as this most recent rise as this market moves up and is currently trading up about $6 on the day, or 0.5% higher. Silver, it's actually up over 1%, 1.11% higher, up about 22 cents on the day. Again, the low 1952, the high 2022. You can see that it is just off of that high. And we've got a scenario where we're seeing some short covering coming into the market today. We'll talk about silver towards the end of the show. We are looking at a half-a-day chart, and on this half-a-day chart, we can see the dramatic fall in terms of the price of gold as this market really began, at about 1360, and at this point has fallen to a low of 1225. Interestingly enough, our line in the sand, so to speak, has been around 1236 to 1240, and it's a 76% retracement of this entire rally. But really, to make any kind of real technical sense, if there is technical sense to be made, is to look at a much more long-term chart, because the market has traded in this area, but not for quite some time. So traders, in order to try to make sense, as I said, all I have done is I have pulled up a weekly chart. I've compressed it to a degree where we can see the market last time it came in was around this price, and then simply put a horizontal line, which really began at 1225 or the low, and I simply told it to carry it all the way across the screen. And lo and behold, when we do that, I draw your attention to the marketplace at the end of 2009. This is when we had the beginning of this bull market run, this historic rise. Market starts below 700. We get our first real rally, takes us to 1,000, backs off of the 1,000, second attempt at 1,000, backs off of the 1,000, and then the third time it goes through with a fire. And that fire is put out roughly at 1225. You can see that top here. So in terms of historically looking for an area where this market has found some sort of support, you see that technically speaking, we have seen this area form as resistance back in 2009. And my sense is that one man's ceiling is another man's floor. So we have it being a resistive area here. Let's see if it can maintain itself in terms of being an area of support right in here. You know, one of the reasons that I'm absolutely so fond about technical analysis as a premium way to really dissect or uncover interesting patterns within the market is that it's almost like a puzzle, almost like a hunt. And so that when we get these lows, for example, today at 1225, in my most recent history, as we looked at the decline of gold, we really hadn't seen the market down in this area except for this one time here, right when it went to 1181. And it's not until we really look back, historically speaking, that we can see that there was some sort of reaction before, and we see how the pieces of the puzzle fit together. Now, yet another way to look at it, we're looking at our daily chart, and that has our most current Elliott wave count with our intermediate as well as a sub count here behind the intermediate. When we look at this chart, a couple of things really stick out. First, the 76 that we have on this, roughly 1249, market is trading right at this point. This is that one peak on a Japanese average chart, of course, where we had 1225 being the high before it found some sort of resistance. So there is some historical data between 1225 and 1249 that really allows us to say there is the potential that this market could find support here. However, for the time being, For the time being, we're short in the 70s plus. I want to see how this market reacts, but I will be sending out a special trade alert, and we will move our stops and protect our profits. But I want to be careful as I do that, because I want to avoid the normal trading range to get us whipsawed out at the worst possible point, and at the same time, I want to be able to catch as much of this downside as possible. If it's over, of course, we want to get out, but I don't think that we are certain at this point that we have seen the last of this market moving down. If anything, I think that there's still more downside pressure ahead. Certainly not today, though. When we look at this chart, I still believe that we are deeply entranced, in this third wave, which is composed of 3 of 5. And I think that we still have a ways to go. But there will be a point, of course, even within wave 3, that we see some sort of bounce. So wave 3 is probably going to be composed of at least a 3 count, something like this. And we've really, so far, only experienced the downside component of this sub-count wave 3. And I do think we'll see some sort of bounce and then a move back down. It could be a 5 count, but typically as you get into the sub-count, you can get a 3 or a 5 count on that. We want to be sensitive to changes in the market, but flexible enough to try to maximize as much as we can the profit potential of our current trade. We're looking at our weekly chart, last chart for gold for today's show. And the key difference on this chart is really where our Fibonacci retracements are put. Realize that the shorter term charts, I'm really looking at either this particular rally here or this sell-off here to give us an indication or a price point right in here. But to get a more long-term view of the market, of course, you can see that I've got our very long one, which encompasses the entire rally, and then a secondary one that starts at about 1,050 right in here. When we do that, we get a couple of different areas. One area worth looking at is going to be the real level of resistance that I see in the market, which is a 76% retracement of this shorter move, meaning 1,050 to 19 plus, and that's a 76% retracement. Of course, here we go back to 1,300, well over 1,300, roughly 1,380 in here. So this is an important point here in terms of maximum support. Well, we've broken through what we considered to be support, and as you know, I don't really see any major support coming in until about 1181. In terms of a long-term view of the market. So we're at a sensitive point. We want to be cognizant of moves and potential moves in the market, but for the meantime, I do recommend that we maintain our short position and look to trail our stops up accordingly. Traders, we are looking at our daily chart in silver. It is in Japanese average format. I draw your attention to our current support level, and I've done that just by using this shorter rally right here from this bottom here at 18 up to 25. And 1967, of course, the market is trading above that. But that is what I am pegging as our current level of support. A break below that, of course, to me signals that move to $18. Finding support in this area, our next real level of resistance would be 2068, but right now we are trading above it, but ever so slightly. Again, maintain our short position, but look to trail your stops tighter. You can do that on your own or wait for my trade alert, which will go out either today or tomorrow, but we will monitor the market very closely throughout the day. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. And remember, this is a shortened week with Thursday in the United States being Thanksgiving, so there will be no report on Thanksgiving or when the markets are closed on Friday. Have a great day. We'll talk to you tomorrow. Bye-bye.